Hello, everybody, and welcome to our Introduction to Accounting Part 6. We're going to be recording transactions right over here. So when we record transactions, guess what we're going to do? We're going to use T account. So I've prepared a few of these here for you. We're going to go do these real quick. $2022 X and Y form YYZ Inc. X and Y each contributed $100,000 in exchange for common stock. Okay, and there was something I forgot, children. You guys aren't kids, right over here. So using the T accounts provided, record the transactions listed below for YYZ. All transactions occurred on December 31st. So let's go back over here. On December 31st, X and Y form YYZ, and they each contribute $100,000 in exchange for common stock. Now, let's remember over here, when I look at my equation, right, I've got my assets are equal to my liabilities plus my owner's equity, right? So assets increase with debits, decrease with credits, liabilities and owner's equity. I'm going to increase those with credits and then decrease them with debits. So here I'm YYZ and X and Y are each giving me $100,000. So over here, I'm going to be receiving cash. And when I receive that cash, how much cash am I receiving? Well, right over here for letter A, I'm going to be getting $200,000. Where am I getting that $200,000 from? X is giving me 100,000 plus another 100,000 from Y. And this is going to give me $200,000. So I'm receiving cash. Cash is an asset. So I'm going to show that increase of that cash with a debit. Now, what am I giving up in exchange for the common stock? I'm giving common stock. What type of account is common stock? Common stock is a part of owner's equity. It's going to carry a credit balance. It denotes the ownership interest in the company for them coming through. So I'm going to go here, common stock. I'm going to go ahead and credit this for $200,000. Remember, for every debit, I need a corresponding credit, has to go through and to be the same amount. Right over here, December 31st, 2022, I purchased equipment for $15,000 cash. I'm buying equipment. My cash is going down. If my cash is going down, it's decreasing. I'm going to show a decrease to that asset with a credit. Now, for every credit, I need a debit. This is not a 7 Series BMW, so I should be okay. It is an asset. I purchased equipment. Equipment is an asset. And so I'm going to go over here. I'm going to debit equipment for $15,000. Again, equipment's an asset. I show an increase to that with a debit. Next one's a little bit trickier. I purchase inventory on account for $20,000, right? What does on account mean? It means I'm going to pay later. So right over here, I'm receiving inventory. So inventory is an asset. So what I'm going to do over here is I'm going to debit inventory for $20,000. But in this case over here, I'm not paying cash for that inventory. I'm purchasing the inventory on account. So what I'm going to do right over here is I'm going to credit a liability because I'm going to have to pay it later. This is going to be accounts payable. So I'm going to go over here and credit accounts payable for $20,000. This is transaction C. Okay, so again, whenever for every debit, we have to have a credit. Last transaction here, I borrowed money and I'm going to repay it in the future. So what am I going to go through and do with this one over here? Well, what this is going to be is if I borrow money, let's do the easy part first. What's happening in my cash? If I'm getting money, my cash is going up. So right over here, I'm going to show cash increasing for a total of $50,000. But for every credit, for every debit, I need a credit. So over here, I'm going to go ahead and credit an account. I'm borrowing money. So this is going to be a loan payable. So right over here, I've gone through and I've recorded these 4 different transactions. Key thing is for every debit, I need a credit. When you're going through, I borrowed money, my cash went up, But at the same time, my liability went up, right? I'm crediting loan payable. This is an obligation that I have to repay in the future. So again, this is our part right over here. We are done with this video. I want to thank you for joining me here today, and I want to thank you for leaving any questions below, and I appreciate your liking and subscribing. Have a great rest of your day.